This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And it is nice to see some green on the screen. We saw it in the early morning trade, but we're really convinced we wanted to see that hold with more volume on the floor open through the morning and early afternoon session. We have seen that happen. A lot of that thanks to news that China would be stepping in or potentially stepping in and buying about $30 billion in agricultural products. But again, kind of take this news with a grain of salt. We've seen this plenty of times before. Buy the rumor, sell the news. We need to see some sort of real substance and kind of something in writing with regards to what a deal would all entail. We haven't gotten that yet, so still a little bit skeptical, but certainly kind of helps negate some of the recent bearish technicals that we've seen as of late. Now, with March option expiration tomorrow, we're going to put our focus on those May futures. For May corn, some of the technical levels we're looking at, 386.5 is the 50 and 100-day moving average. If we can wrap up the week with a conviction close out above here, I think that puts us into a good spot in the next week's trade, and we could see an extension towards 391.5, which represents the top end of the recent range as well as the 200-day moving average. Now, as far as the soybeans are concerned, a very choppy session here, and really over the past couple of days, we've been forming a little bit of a wedge. So if you can imagine, higher lows and lower highs typically leads to a breakout or a breakdown. That trend line resistance from those lower highs comes in at about 930 on the support, 910, basically today's trading range. Looking for some maybe fundamental news tomorrow when we get kind of that data dump from the USDA to break us out or break down of this range. We remain relatively optimistic this market, so we would like to see some positive news press this market higher. Now moving over to the wheat market, wheat for that May contract in Chicago, $5 psychologically significant. We want to see a closeout above here to really kind of start rebuilding some of the technical damage that has been done over the last week. We saw the forced liquidation via margin call selling earlier in the week. A nice little bounce today, but we need to see follow through momentum to really feel comfortable about stepping in this market to the buy side with some aggression. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.